Okay, so good morning, everyone. Welcome to the Macro Snapshot. We are Tuesday, April the 22nd, 2025, recording this, what is it, about 7:30 in the morning. Okay, so obviously, yesterday we had Easter Monday. European markets were, for the most part, closed. American markets had a lot less liquidity than normal, so it was a low liquidity environment. And so we saw some quite big moves. But these were actually also sort of logical moves, so possibly exacerbated by the low liquidity, but definitely not illogical. So what we saw was that continuing strength in the US dollar. This is the dollar index, which is 58% euro, as we know. And what we can see here is that it's bounced off a little bit of a level, 97.75, which you see down here. And from from a technical perspective, this is oversold. If you look at any stochastics or RSI or any of these kind of indicators, it's definitely oversold. But what we can see here is that this is in a very strong downtrend, and the factors for that still remain in place. Over the weekend, and indeed on Monday, yesterday morning, we actually got a fairly extraordinary tweet from Pound, essentially saying, the same old thing about Jerome Powell, that he was a total loser. He was a total loser, and that he needed to be cutting interest rates now, and that the ECB had been cutting interest rates, et cetera, et cetera. So apart from the fact that maybe Powell will be pressured into lowering interest rates, which I don't think so. And in fact, I think it's a paradox because Powell will not want to be seen to be bowing, to be subjected to political pressure. And so the paradox here for me is that through Trump's interventions, he might actually cause Powell to be later than he would have liked to be cutting interest rates, just so that Powell can avoid the possibility or the perception of being influenced politically. Anyway, leaving that aside, what this is doing, apart from the ongoing concern about the tariffs and the potential slowdown in US sort of economy and the general lack of competence being displayed by the American administration, these attacks on Powell are attacking or undermining the very cornerstone of trust in the US system, like the rule of law and the fact that the US, in theory, has a sort of a relatively independent central bank. This is not great for risk assets denominated in US dollars, and it's not great for the US dollar. And again, we see the US dollar being sold off pretty aggressively here. We're getting a reactive bounce, as I said, at around about this 97.9, 98 sort of level here. But as you guys can see, this is, fairly pathetic in terms of strength at this point. And to be honest, unless something changes, and what do I mean by change? I mean that, there's deals on the tariff. Powell definitely resists any kind of Trump sort of pressure. And the US sort of earnings from the earnings season comes in strongly. Maybe at that point, we could get some sort of bounce back in the US dollar. But at this point, the bounce looks to be very weak. And you've got to say that, especially against the safe haven currencies, this looks as though, maybe it'll bounce up to, 99.8 or, even 100 again. But it does look as though at this point, it's looking particularly soft. And let's just look at a bit of a score chart here. I like to look at this occasionally from Saxo Bank. It just gives you a sense. Oh, actually, this one's from the Daily Short. But it's kind of interesting here. Just see, since 1995, just looking just at the dollar, this is all of the sort of the performance during the year, and you can see here, here we are on April the 22nd, just how bad this is compared to the last 20 years. This also, from a seasonal perspective, we're at the lower end of the range here for sort of poor US dollar performance. Now, if we actually just look at the sort of the trend chart to see what's been going on here, you can see that the US dollar overall, you see the trend readings for the last 5 weeks, US dollar pretty negative, and if anything, getting even more negative. We've got the euro looking, quite strong, just very, very solid. And of course, the safe havens, especially the Swiss franc, is getting to, elevated levels, very, very strong. And obviously, gold has been going crazy. So we've got gold very, very strong. We have the Swiss franc doing very, very well. Japanese yen, relatively good strength. Others are sort of drifting downwards a little bit. We've got the pound, the Aussie. But surprisingly, really, it's just the US dollar which is showing a lot of weakness. And here, what's kind of interesting, you look at the Chinese renminbi, and that looks like it's a very strong downtrend. And you go, oh, wow, that's kind of the strongest downtrend here. And obviously, that would sort of say that, I guess that means that the Chinese authorities want the renminbi or the yuan to weaken against the US dollar. So that makes the exports from China more competitive. But what's actually interesting, if you look at a little bit more nuanced here, and this is just all the different cross pairs with a bunch of other things like average true range and whatnot. But if we actually look here, we can see the US dollar versus the Chinese renminbi is actually not that changed at all. Where the Chinese renminbi is actually showing a lot of weakness is against some of the other pairs. So if we start looking at, let's say, for example, here, you can see CAD Chinese renminbi, CAD is up 9.3 here. You see on the score up a lot. Then if we see, for example, the Swiss franc versus the renminbi up 14.5 on the score, very, very, very strong. If we look at the renminbi versus the Japanese yen, you can see it's down 10. Just look at one or two more. You see the euro is up 13. So the point here, and then for example, you look at the pound up 11. So the point is that against every single major currency except the US dollar, the Chinese renminbi is down a lot over the last 3, 4, 5 weeks. So it seems to me that what the Chinese authorities are doing is essentially keeping the renminbi relatively stable against the US dollar, just sort of politically, just to treat that as a separate sort of situation. Whereas against all their other trading partners, the Chinese renminbi is down, 5, 8, 10% or so. So it's almost as though they're saying, well, okay, the rest of the world can take the pain, and basically letting the Chinese renminbi weaken against those trading partners to make those exports much more competitive. So if we actually just now look back at a couple of charts, we can see that. If we look just here at some of the majors here, so actually let's just start with the Chinese renminbi. So as I was saying, if you look at this against the US dollar, this is the daily chart, you can see that over the last 3 or 4 weeks here, actually really hasn't changed that much at all. And as we saw from the that table, it's been weakening a lot against all the others. So just again, looking at some other sort of charts here, we see that the CAD continues to sort of strengthen slowly against the US dollar. So this is USD CAD. So USD here coming down, poking its nose into this big trading range at about sort of 138.5. So we do have the election in Canada coming up in basically a week on the 28th. That looks as though Mark Carney, the Liberal, who's kind of the central leftist, will get into power, not the Conservative. So will that be a slight negative for the Canadian dollar? We shall see. The Aussie actually doing pretty well here. It's been up against the US dollar, but again coming up against a bit of resistance. What's been very, very strong is the Swiss franc against the US dollar. Now it broke down through this level, which I've been watching. So you see, this is a pretty important level here, about 83 and a half, but broke down through that, and now is actually very, very strong against the US dollar. You can see we have to go back. I don't know. We keep on going back. We can't even find it. So at this point, the Swiss franc is getting very, very strong, not only against the US dollar, but also against the euro. If we look against the euro, for example, you could see that actually the euro is strengthened a little bit, but the Swiss franc has actually sort of strengthened against a lot of currencies. And you've got to say, at some point, will the Swiss authorities, the Swiss National Bank, come out, in terms of sort of intervening in favor of the Swiss franc. We do have a speech, I think it's actually happening on Friday, from Schlegel, the head of the Swiss bank. So I'm definitely going to be interested to read about that. Because again, the authorities in Switzerland don't want the Swiss franc to be too strong, because that is deflationary and also it's a drag on exports. Other currencies doing pretty well. Obviously, the Japanese yen. Now we have a lot of meetings in Washington coming up in the next week. The International Monetary Fund, and Besant is going to be meeting with I think it's the trade minister or the minister of finance from Japan. I was reading this morning, and apparently the FX is on the discussion on the agenda. So what we see here is that the Japanese yen here down at 140, very, very key level, as we can all see. I think it's even a triple bottom here. Yeah, it's a triple bottom here. So if that breaks, you've got to say at least down to maybe 137. And to be honest, that would probably be in everyone's sort of benefit, really, to have that. The Americans would like a stronger Japanese yen, just in terms of exports, and just for the Japanese, that's a relatively easy sort of victory, so to speak, against for the Americans. Just say, hey, our currency is quite strong. It's not so great for Japanese exporters, but it may be at the moment that's a political pill they will have to swallow. But definitely a very key. I mean, and ordinarily that would be an interesting point to be going long the US dollar if we get some kind of bounce. If there's any sort of a trade agreement announced between the US and Japan, that could actually be a pretty nice little place for people here who have been short to take profits. We might see a little bit of a bounce there on any sort of positive news about a trade deal between, as I said, the US and Japan. Other one which is very, very strong is the euro. Just taking a little pause today, but we can see here that it's basically above about 115, and you can see it's decisively broken out of this trade range, just retesting this level here about 115. But to be honest, there's not a huge amount of resistance. It would not surprise me if this chunks up to 116 and a half, and then up to maybe 119 or so. And maybe that could be the new trade range, could be something more like 115 up to about 119, 120. Excuse me. So at least what we're seeing at the moment is continuing US dollar weakness. And as I said at the top of the video, until and unless we get stability out of the White House, more competence out of the White House, some trade deals announced, and potentially evidence that the US economy actually is not being affected negatively and is actually strong, and also a strong earnings season. I think it's going to take all of those 3 or 4 or 5 factors to really have a substantial rally again in the US dollar over the next few weeks. Now, yesterday, what was actually pretty extraordinary was just the steepening of the US yield curve. And we saw, let's have a look here. So if looking at the yields here, we can see here that this is the 2-year yield. So you see that over the last 2, 3, 4 days, it's come down up a little bit today. But if you look yesterday, it was down quite a lot. And compared that to the 5-year, which has been going up. And then look at this 10-year, very strong. And then the 30-year, very, very strong. So everything's reversed a little bit just this morning overnight, so a bit of flattening and whatnot. But essentially, we had an incredible steepening of the curve yesterday. We see that steepening there on the 5s, 30s. On the 2s, 30s, you see it steepened a lot. And you see something like the 2s, 10s also steepening quite a lot. And that's no surprise, because with the attacks on the credibility of the Fed and on Jerome Powell, the market is very worried that Trump is going to somehow, force Powell out and replace him with a dove who will cut interest rates. So that's going to bring down the front end of the interest rates, but it's going to be less aggressive in attacking inflation. So that means that inflation could get sort of unchecked and go a little bit more out of control, become even stickier. And therefore, that's being reflected with quite a lot of pain on the long end of the curve, so the 10s and the 30s. And you see here, just with the 30-year yield, just how much it's moved. If you look at it going back to, the 7th of April. So a couple of weeks, we can see that it's gone up about from about 4.35. So that's about 50 basis points or so, 55 basis points. So very dramatic here, kind of steepening. And that makes sense. The market is worried that, the economy might slow down. The Fed might cut at some point or be forced to cut politically, bringing down those front end yields. But still, inflation is a bit sticky and an issuance is still very heavy. The deficit doesn't seem to be coming down that much. Remember, Doge was supposed to be cutting a huge amount of money from the US deficit. But, the reality is they've gone a bit quiet over the last 2, 3, 4 weeks. So it seems as though Musk is losing interest or influence, and that ultimately the deficits are not going to be that much cut. So we're still getting very large issuance on the long end of the curve, and that's going to keep the pressure upwards on the yield. Now, ordinarily, as I say, these upward pressure yields, especially on the belly to long end, would be sort of positive for the US dollar. But as we saw, that's not happening. So we're getting a very strange historical decoupling here, that US yields are going up, but the US dollar is not benefiting from that, and is not benefiting at all from kind of worry or as a safe haven asset. So, historically unusual situation here. What is historically interesting is gold, which, giving back a little bit this morning, but essentially going almost parabolic here, completely overbought from a technical perspective, RSI and momentum oscillators and all this kind of thing. But it's difficult to short at this point. I mean, I'm thinking, it is kind of interesting if you look at, actually looking at the August contract, and if you look at a measured move, you look at this impulse here from just before Christmas, and if you look at a Fibonacci extension, it did actually get to the top of that measured move there, and just coming down a little bit. Is that just a little blow off here? It's getting a little parabolic. We get it. Everyone's buying it. It's going up, especially in dollar terms. It's a safe haven. Central banks are buying it. Market participants are worried about inflation getting out of control especially in the US, or remaining sticky, the debasement of the US dollar. So there's plenty of reasons to be buying gold. But this is getting a little crazy. It's been up 30%, I think, here from the beginning of the year. So if we look at something, like from the beginning of the year. I think it's almost 30%. Yeah, 30% there. Um, and so, that's interesting. Will this have a nice little sort of pause for the moment? Difficult to short it structurally. So I think it's more a question. People will be sort of, buying rallies there. Silver. Just also pausing today, not a lot. It hasn't really participated in the gold fever. It did have a nice bounce, but again, silver is more tied to industrial sentiment, as we know. Interesting, also just keeping an eye on copper here. Copper, for me, is an interesting one because we're getting up to sort of a Fibonacci retracement levels here, so it could push up a little bit more to, let's say, 4.88 on the front contract here. But I mean, for sure, the US dollar is weak, so ordinarily that could be a headwind for the price of copper. But at this point, we don't have a fantastic sentiment globally in terms of sort of industry and global trade. We all know the reasons why. And at this point, we also don't seem to have a huge amount of active stimulus for infrastructure for China. So I think copper here, I'm just interested to see if copper has a little bit of a pause, as it gets up towards this 485, 487 kind of level, keeping an eye on that. Finally, guys, just want to look at some of the stocks here. We saw that the stocks yesterday had a sell-off. As let's just put it on the 4-hour chart, which I was saying yesterday is that with the lower liquidity and just the Trump's hammering of credibility of the Fed, what the bulls would have to do would be to step in. If I don't know if you remember the video yesterday, but we did the short-term impulse here, basically going from the impulse up here and the 61, and I basically said that at this point the bulls would have to step in. That's exactly what they did at the 61.8 fib retracement here. There's been a little bit of sort of a bounce, essentially from about 2:30 yesterday afternoon. Now, at this point, what does this tell us? Not much at all. This is a very, a tiny bounce. This is not some kind of, wipeout. So let's again just use some fibs just to give us some anchoring points here. And again, on a very shorter term fib here, again, you can see here that this little sort of overnight bounce has not even come up to the 38% level. So still very, very weak. And to be honest, the bulls cannot, claim any sort of victory or any kind of confidence, at least and until they get up to this, let's say, 53.85 kind of level above there, and probably even until they wipe out something like that. And we're still, quite a long way from that. So at this point, this is just a little reactive bounce. Again, maybe this was a little bit overdone yesterday because of lower liquidity conditions, but there's still no active good news. There's no serious trade deal sort of announcements being announced with Japan or China or the European Union. The earnings season has been reasonable so far, but we're still waiting for the heavyweights, some of the Mag 7s. And we still have a lot of instability and sort of chaotic sort of lack of confidence coming out of the White House. And until these attacks on the Fed stop and until we get those other factors, I think that at the very minimum, stocks will be trading heavy. And so it's just a question here of trying to pick your poison, like what's a good point to be shorting. That's the one to be looking at. Just keep a little eye on the VIX. You see that it's still at elevated levels as well. I mean, this is indicating about a 2% swing every day at a level of 32. Just getting back to the bonds, just wanted to actually show something quickly to put in perspective. And this is also for sort of for corporate bonds here. So we're seeing here just since April the 2nd, which of course is Liberation Day, just the performance of the different quality of bonds. So what we're seeing here is not only a flight to safety. So you see here that the double A's have completely outperformed, sort of the junkier bonds. You see here the triple C's, all sort of in the red or in the yellow, so to speak here. But what's actually very noticeable as well about corporate bonds is just it's also the duration. So you can see here that duration has absolutely outperformed as well. So long duration has underperformed, so short duration. So you can see here that the top performer is really at the very front of the curve, 1 to maybe 2 to 3 years here, whereas the further out the belly you go and further down in quality, absolutely being slaughtered here. So you see if you go out to the belly of the curve, the double Bs and the Bs, getting really sort of hurt here. So that's telling, and this is an unusual situation for corporate bonds. So this is really telling us that long duration is not being trusted and just a lack of quality. And if you look at the credit spreads as well, they have been sort of coming a bit wider over the last sort of period. And we can just finish having a very, very quick look at those, just because we haven't looked at those in a while. So if we look at a couple of credit spreads here, if we look at the US high yield spread, it's come in a little bit over the last couple of days, you see, but you basically can see that since the middle of February, we've gone from about, 2.5%. We got up to about 4.5%. So that's gone up 200 basis points. Now, as I say, the last 2 or 3 days, it's come in a little bit. Looks like it's going up today. So definitely the credit spread's starting to feel a little bit of pressure. Or remaining here at elevated and pressured levels. So that's also going to make it very difficult for the stocks to have a meaningful rally until they get down to less elevated levels. Okay, I'll leave it there, guys. Gone on a little bit too long today. Have a great day. Not a huge amount of data. Let's see if there's any sort of Fed speak or any more tweets from the man in the Oval Office. Thank you very much, and let's keep on talking.